Welcome back. Home Depot has reported first quarter revenue that exceeded expectations, while earnings per share came in just a bit short of expectations. Despite tariffs on many of its products, the company maintained its 2025 guidance and ruled out any tariff-related price increases in its aisles. Our next guest has an outperform rating on the shares of Home Depot. Joining us from New York is David Bellinger, an analyst at Mizuho Securities. David, thanks a lot for joining us. How would you characterize the company's performance in the quarter and its outlook? It is still saying that many of its customers are delaying those large renovation projects.
Hey, good afternoon. Thanks for having me on. We came away constructive on this quarter. The biggest surprise here is you had U.S. same-store sales flip positive, very slightly positive, but the investor expectations going into this print were for down 1% to 2%. They clearly beat that. You had sales accelerate through the quarter, and some of the commentary on the start to May has been good. You've seen that April acceleration continue to the first few weeks of May here. But as we step back and look at this, we think we're as close as we've ever been in terms of this housing and home improvement recovery. The tariffs are a bit of a wild card, but it turned out to be sort of a non-event for Home Depot. They said they're not planning on raising prices. They can have their vendors absorb a lot of costs. So really a non-event here, and a bit of a surprise, a different tactic than what we heard out of Walmart. But it looks like Home Depot will try to maintain pricing as much as they can, hopefully gain some share in the process. So we still like this one, and we thought the quarter overall was solid. The reiteration of guidance is another positive.
So Home Depot says it will not raise prices on balance, despite what could be higher input costs because of tariffs. You're unconcerned about profit margin at Home Depot, are you? Arising out of that pledge to let the suppliers eat the tariff expenses?
We're not at all worried about margins starting to deteriorate here. And what HD has done really well is they source more than half of their product domestically. And that a new data point on the call was that a year from now, no single country outside the US will make up 10% or more of receipts. So they've gotten out of China pretty quickly, diversified their supply chain really well. So you have had these vendors more take on the cost than Home Depot. And if you are a vendor, Home Depot's got 2,000 US stores, you want to be part of this growth story, right? Home Depot, Lowe's are a few large players in the US. That's where you want to be aligned. So they've got good pricing power over these suppliers. They can have them absorb the costs, and in turn, Home Depot's margins really won't be affected. And you saw that in the guidance. They did not take down any profitability measures or anything like that. So still a strong outlook from Home Depot, but definitely a different tone or a different tactic than others out there.
How big of a project is it for Home Depot to change its purchasing picture so that no one foreign country amounts to or delivers more than 10% of Home Depot's products?
Yeah, it's a big overhaul, but they've been doing this over years, right? The first round of tariffs with President Trump in 2017, 2018, they started moving away from these countries of origin like China into Vietnam, back into the US. So it's been a long process. It's not easy. It's not easy to stand up a factory and produce product right away. So they've got to have this foresight and make these decisions not rapidly, but in a very measured pace to not get hit with a new tariff if you're moving out of China to country X. And we've all known this has been a very dynamic environment, but HD's managed it very well. And just given the size of their business, that they can have that power over the suppliers versus their small and medium-sized peers.
You have an outperform rating on the shares and a price target of $450 US per share. That's one of the higher targets on the street. How do you get to that target?
Yeah, look, we're using a mid-20s PE multiple on next year's earnings estimates. And look, this does screen expensive, right? So Home Depot has traded in this north of 20 times, upwards of a high 20s multiple throughout the course of their history. But the investors really want to own this for the recovery. So there's a lot of earnings torque here. Investors are paying up to get ahead of this. It's been delayed, right? It's arguably been taking longer than we expected, but investors are positioned here, and Home Depot could quickly be a $450, $500 stock, right? If you do get the sales to materialize and they've got a nice margin flow through attached to that. Hopefully they'll be buying back stock again in the outer years as they get past this SRS acquisition that they made. So the demand picture has been slow, but nothing has changed secularly for the home improvement space.
The fixed income market believes that the U.S. Federal Reserve will cut its benchmark interest rate twice for a total of 50 basis points by the time 2025 is over. How beneficial to Home Depot would be a cumulative cut of 50 basis points to the Fed's benchmark rate?
Yeah, that would be a huge positive. I'm not smart enough to know what the Fed's going to do or even opine on that. But you've got a 7% 30-year mortgage rate now in the U.S. That's a high number, right? And Home Depot talked about that today, that people just aren't taking on that big ticket project, that big ticket renovation, because rates are so high. But if you do get a material cut, and it wasn't that long ago when mortgage rates were closer to 6%, as soon as you see those come down, that does accelerate activity. Home Depot's seen that week to week, month to month. If rates start to come down, that does get people off the sidelines, start picking up these jobs, and it translates to these businesses pretty quickly. So any kind of rate cut here, as long as rates don't start moving up again and north of 7%, I don't know how much higher they can go, but a rate cut would definitely be a positive for these businesses.
David, thank you so much for sharing some of your insight with us today. David Bellinger is an analyst at Mizuho Securities, and as you just saw, is an expert in Home Depot. Well,